I was referred a client from a past client of mine. This particular seller owns about 3 properties that are adjacent to one another that were passed on to him from his father as a gift. It was passed on to him and his 2 brothers. So he called me and said, Doug, I have these 3 properties. We looked into the numbers. They accumulate to probably around $1 million, give or take. And he said, well, I'm concerned in the taxes that I'm going to have to pay. These are investment properties. So what would happen is that he would have to pay, him and his brothers would have to pay capital gains tax on the sale, which could range between 15 to 25% of the sale price. So, on $1 million sale, you're looking at, it could be up to $250,000, which is significant. So he asked me and said, Doug, is there anything I could do to not have to pay this? And in fact, there is. And what it is it's called a 1031 exchange, which is something that you do with investment properties, property or properties. And what you basically do is you go through a 1031 exchange company and you have to identify the new properties that you're going to buy before you sell the one that you currently own. And so what ends up happening is you identify those properties up front. You make the 1031 exchange company aware of this, and you go through the process with them by filling out paperwork, and you basically have 45 days from the sale of the properties that you own to identify the new ones and then settle on them within 180 days, which is 6 months. Now, if you do this, you're able to pass the proceeds from the sale of the property or properties that you own into the new asset, the new properties, property or properties. And what this does is you do not touch the money. It goes through a 1031 exchange, and the money just goes from one asset or assets to the new asset or assets. And it has to be an equal value or more. So, if we're selling these 3 properties, the new one or ones that he's buying are going to have to be $1 million or more in value. And when you do that, you do not pay capital gains tax, you defer it, which I'll get into that in another video. But that's what happens. You do not touch the money just goes from one asset to the other, and that way you're not paying capital gains tax on the sale.